right, guys, we're going to get started here in a minute. Today should be a fun day with some comedy around chart of accounts, and I think a lot of people stumble on what is the right way, what is the best way, how can I get all my data out of chart of accounts. So should be having some fun today. All right, let's get started. So hey, everybody, this is Marjorie Adams. I'm going to be moderating the call today. So we are going to be talking about chart of accounts organization. So this is not like how to chart of accounts, but this is more the whys, right? So we're doing a panel discussion too. So hearing some of the stories of what some of other businesses have done, things to think about, things to stay away from maybe. So that's what we're going to be going over today. So today I have Trisha and Alicia joining me, and we're going to be spending most of the time in product. I'm going to bounce around based off of what we're saying. What I wanted to kick things off with today, though, is just talk about chart of accounts organization, right? So why it flows the way it flows. So when we go into our chart of accounts, it's under company, chart of accounts down here. You can also go to chart of accounts over here on the home screen. The chart of accounts flow that you see here, right? What it should be is it should be in balance sheet, right? So you see the balance sheet accounts, what you would see if you were to run a balance sheet report. You see bank, cash, assets first, accounts receivable, other current assets. So follows the balance sheet. And then once you get down to equity, that's the bottom of the balance sheet. And then next comes P&L. Income, cost of goods sold, expenses. Then we should have other income, other expenses, and then these non-posting, they just create down there, but you don't have to worry about those if you're using those non-posting transaction types. But that should be the flow, right? That's the way that it's meant to be set up, is if it's in its correct order, right? You can get the chart of accounts out of order. So if I wanted to sort by bank or balance total or something, it'll go out of order. I can come back and click on this diamond here, puts it back into regular order. Okay. So that's the workflow here. We're going to be talking about different chart of accounts types a little bit today, account names, some other things. But I just wanted to start off with chart of accounts is an area we say, I don't know, you guys, Alicia and Trisha, you guys probably know better than I do. How many chart of accounts do we say is a reasonable amount? I think,
I would say 200 or less. 200
or less. Okay, so 200 or less. So if you come in here and you push that F2 key and you pop up and you see accounts and it says 4,500, which we do see a lot, something to think about. So that number there should be 200, right? 200 or less. And what that means is don't track this extra data of things, right? We've seen this in some of our other videos, but track it somewhere else, maybe not here. So speaking of that, Trisha, what have you seen that was kind of I don't want to use crazy because it seems like a negative word, but just oh my gosh, make you step back a little bit, chart of accounts. What client, tell me about a client that you've seen that just kind of had it really set up.
Well, when we talk about, we talk about the chart of accounts and having that less than 200 is what we're looking for, is I start looking at and see if they're duplicating information. So, looking at if they have their item set up and they're tracking income by item, or they're tracking, income by location, income by revenue stream. That kind of stuff that we can still report on that information, but it doesn't need to reside in our chart of accounts, that there's other features such as classes, custom fields, and of course, item profitability reporting that they can use to still get the same information, but we can reduce that number. So that's usually what I look at. On the expense side, it's more kind of looking at how much are we breaking it down? Do we really need to see, for example, your car expense? Does someone really need to see that detail level and reporting that they really need it broken down into those subcategories? Who's looking at it? So that I start asking that question, are we really reporting and we want to see what we spend on gas? Some companies absolutely do, but just making sure that it makes sense and we're using the information and reporting wise.
I like that a lot. Alicia, what about you? What's the craziest chart of accounts situation that you've run into?
You know, for me, one of the things that like first came to mind, and it was probably over 8 years ago when I first got here, I had a client that every single customer they had an accounts receivable account set up.
Oh, God.
So they had over 200 plus accounts receivable accounts. And when I talked to them and said, why don't we run sales by customer summary report? They were like, I don't know what you're talking about. So of course I showed it to them, and they were shocked that this report gave them exactly what they needed. So then of course I had to merge every single one of those AR accounts together, and that is a manual process. So you know, it runs, I mean, there are other ways, like Trisha was saying, to get information out. I think also, you know, just not doing like headers and subs, where I've just had, you know, like 1,500 accounts that are just straight chart of accounts, no organization whatsoever or subs. And things like, you know, everybody's adding to the chart of accounts. So you get like, you know, bad debt, credit card fees, bank fees, like, and it's all the same thing. And it's just, you know, over and over and repetitive. And so when you start talking to clients and they're like, I didn't even realize. So yeah.
People just find a way, right? That's what always,
Push
because QuickBooks is a flexible product, so they figure out a way to make it work for them. And you know, that's what we all did. That's how you learn too, but a little bit, right? But that's what we all did back in the day as well. So speaking of header and sub accounts, so when we're talking about header and sub accounts, hopefully everybody is aware of this, but you can have, right? So like you see payroll liabilities here. That's what we call a header account. And then underneath of that, you can have sub accounts. So SEC 125 is a sub account of. If I were to edit this, it is this little checkbox that says sub account of, and that's what makes it be a sub account of payroll liabilities. Now you can go, as with not any list, well, most lists in QuickBooks, you can go down 5 levels. So I could actually drag 401k and make it a sub account of SEC 125. I could drag payroll taxes payable, make it a sub, right? So I can go 5 different levels deep is what is possible. Let me just say that. That's what the system can do. I just wanted to say, Alicia, have you ever seen anybody go more than 2, right? Like header and 1 level sub down?
Yeah, header and 1 level sub down.
Like
yes.
They went more than that. So going to this 3rd level here.
I've seen the 3rd level, it only on one client. It was the client that had the 200 accounts receivable accounts. But we fixed it, and they got, you know, to the point where it's like, it just doesn't make any sense. You know, we see all kinds of things here, and then we have to kind of talk to them about, you know, what we can do, alternatives. For example, using things like, you know, classes and other report capabilities, but I would never recommend it. I would always, you know, maybe going to the parent and the sub, but try not to overcomplicate things and try to make sure we're using the system, you know, to its full potential, instead of, you know, creating so many options and where people just get confused.
So would you, Trisha, would you ever recommend going more than 2 levels down?
I wouldn't. Basically like what Alicia's saying, when we look at the chart of accounts, we want it consistent and we want it simple. Like,
Mhm.
you want to be able to, that goal of having that one page of financials, to be able to collapse them and, you don't need all the details. I've seen where they want to put like under employee advances and they want to put every employee's name. And so
Mhm.
talking through why, number one, you don't need an outside, anyone seeing at your financial level, each employee's name and what advance we've given them.
How much
Right.
does she show? Yeah.
Yes, exactly. So, you know, you know,
There are other
bringing
ways.
them back to, yes, that simple reporting and, always showing them, we can still get what you need. You can still see what they owe, but we don't need it at financial reporting.
Mhm. Mhm. Especially when we're going into things like budgets, right? Like because if you have it in the chart of accounts, then it's going to show up on your budget to assign a budget line item or a budget a number at the budget
Mm-hmm.
line level, and then it gets super confusing. So you're like, well, how much am I supposed to budget for?
Employee advance for Trisha.
It's for Trisha, right? Yeah, it gets super confusing. So it can be
We're picking
overwhelming,
on you
right?
today, Trisha.
It can be
Yes.
overwhelming. For sure when you're going to doing those. And that's why I think a lot of people get away from doing budgets as example, because if your chart of accounts is super long, it's just like, I don't know. I can't go through 2,000 lines and assign a number for the budget for the whole year. So then they just don't do it at all. So that's
Yeah,
awesome.
it can be complicated like you're saying, but also at the same time, if there's so many different options, there's no consistency. So therefore, it's like, how do you take 20 different accounts that are exactly the same thing that have never had a consistent and be able to forecast or budget the next year? So yeah, definitely agree. That's probably one of the reasons why I feel like people back off of doing that.
So Trisha, what about what's the most number of accounts, like when you've seen header accounts? So now people have used headers and subs, so that's a good step, right? When we log into an account, we see that they've got headers and subs. We're like, okay, good. They're trying to organize. What's the most number of accounts that you've seen, header accounts that you've seen in like the income section? What kind of business would have you seen multiple headers set up in the income section?
Most of the time, what I see is when they think that they have to track at their chart of accounts, their revenue streams, their location. And so they're breaking it down, to use location, each, location's revenue stream. And so, they're breaking it down. What I start looking at is going back to, can we get to one income account? Can we get to just our type, of income that we, repair, installation, equipment sales, and then use those other features to track them, so when I start seeing 4 and 5 levels of headers, I start like, let's see what our other options are to reduce this. Because again, you're going back to not only reporting wise, but when you see the duplications of, I see it on expense. Well, they'll create a, car truck expense, and then they have underneath the same, truck expense. Well, now you're asking someone to, when they create that transaction, which one do I pick? And so you start, some are doing header and some are doing subs. So really making sure, does it make sense to have all of these headers? Do we really need to see that, especially if it's a 1-for-1 match?
I like that. So in expense sections, Alicia, maybe not what is the most number, but about how many header accounts should people have?
I typically say, if you are rolling up to where you've got headers and then subs underneath and you don't have any free for alls, if that makes sense, like just the bank service charge, right, that you have right here, that should go under like G&A, right? So I typically say anywhere from like 8 to 10, but that is when you have when you're looking at the financials, you're just seeing like 8 to 10 high level accounts that are giving you kind of your, your company expenses in a high level view. You can always drill down and see that. But all these like one-offs that we had, on that chart of accounts, those would all be underneath something. And so, 8 to 10 is pretty, that's a really good amount to be able to see where you're spending your money.
Internally, we talk about the fact that you don't want to have, so first of all, you want to get people's attention with your chart of accounts, right? And if you have something like, maybe in certain businesses, mileage is a huge thing, but like in the accounting industry, as an example, mileage may not be a huge thing. So if you have a line and it's, you're a $15 million business and you have a line that people are looking at that is, $180 over the course of a year, we don't want to distract them from the most important things, because then you know that they will get distracted from that mileage, because they're like, what is mileage? Who's charging mileage? And then they go down this rabbit hole and it's all over $180. So what we try to help people to look at is, 5%, right? So nothing should be more than 5%. Or less than, nothing should be less than 5% of income. If it's less than 5% of income, then you need to bucket it somewhere else. You need to stick it somewhere else and put it in a different bucket, where you can still drill down on the details somehow, but you don't have to have it as a line item here. What account name or account type, right? Have you seen? Alicia, we'll start with you. That confuses people the most. Like, they don't know where should it go. What type of thing? What chart of accounts account type do I put this as?
So I will just say, because this is one that I kind of do a speech on, because I work with a lot of inventory clients. So the inventory offset account is the one account that when you turn on enhanced receiving, people tend to have no clue what it is, right? They don't understand, because it says inventory in it, why it is like what do you do with it, right? I definitely wish Intuit would change that to be called purchases clearing account, because it makes more sense than inventory offset. Not everything you buy as an item does have to be a true inventory type. But that is one account that people just, they don't get. So when I explain it to them in that sense, it does make, does help them. They will now be able to reconcile and understand that. But that enhanced receiving is a feature that people will turn on. When you turn it on, you can't turn it off. So you can't just get rid of this account. QuickBooks has to have it. And so really all it is a clearing account. That's it.
Yeah, I like that. I was trying to show everybody, but of course my poor sample files just get abused.
We abuse them.
I know, it's just get so abused. It's like, no, I'm not going to do this for you today. Trisha, what about you? What is the account name that you see that people just don't know where to stick it? Where is it supposed to go?
A lot of times it's customer deposits. They're taking prepayments for their customers, and so they think because they're taking money in that it's an asset to the company. So explaining to them why it needs to reside in the liability section is something that seems to be confusing, or even tracking customer deposits on your balance sheet. So explaining that a lot and how we handle that account, what it's used for, and how we can keep track of it is one that I have lots of, questions and training and design that, working in with customers, especially in that construction industry.
Agree.
And we see a lot of people run that through as a negative accounts receivable, which could have, when you're talking to banks or whatever, a lot of times they'll look at your accounts receivable number, and if you have it as a lump sum together, even though, the net of it is the same by separating it, but if you have it together and they're just paying attention to the AR number, then it can hurt your ability to get, you know, get some credit lines going or anything like that.
Yeah, financial presentation is important.
I think another one that we see frequently, right, is in the accounts receivable space, we'll see, so accounts receivable is a type. It's a type of account. It restricts you from doing certain things if you choose accounts receivable account type in here. So like if you're doing a journal entry as an example and you choose accounts receivable, you can't have accounts receivable and accounts payable on the same transaction, and you have to assign it to a customer if you're hitting the accounts receivable account. So what we see a lot of times too is we'll see people get confused, and they'll put, because in their other systems, right, they moved from Sage 100 or they moved from NetSuite or wherever they moved from, their allowance for doubtful accounts will be an accounts receivable account type in that other file. And in QuickBooks, you're gonna struggle with that a little bit, because those journal entries that you do at month end or year end or whatever will have to be tied to a customer if you do it that way. So we generally set them up as other current assets. Right, are there any other ones that you guys? As contra,
I think in the same sense, I have a client that we're working with right now that they set up their accrued expenses as an accounts payable, because in their mind, you know, they have to pay, and they're dealing with the same thing. They don't understand why it's wanting them to choose a vendor's name. So
for several vendors, what do you mean?
Yes.
What about what's the funniest account, Alicia, that you've seen on the chart of accounts? Like, what's the funniest account name when you've gone and logged into a customer file and we're running through? What have you seen?
So I have quite a few funny ones, but I will say, you know, one of the ones that truly made me laugh out loud was no idea how this got here. I think that was literally the name of the account. I mean, it got there somehow, right? But that was one. I also had one where they put mice, so it was pretty clear on, you know, that pest control. That was a pest control expense, but they had mice problems.
If you go to you're going to your investors.
Yeah,
you're just you're spreading the news that we have a mouse problem in our. I don't think that they need to know that. Yep. Oh gosh.
And I know Trisha has some too, but also, you know, I think it goes back to like the number of accounts, right? And so, you know, some of the ones that I see a lot, it's like every kind of section has like just so much detail, like office supplies, and they'll have like subs where it's like pens, pencils, staplers, like, because we buy a lot of staplers nowadays, I guess. Staples, and that apparently can't go with the stapler, paper, like things like that, where it's like, wow, you know, it's just crazy. So, but yeah, that's one of the funniest that kind of came to my mind.
So Trisha, what about you? What's the funniest account name you've seen?
For me, I had a small business, and so he was doing his personal expenses in with the business. And so instead of just, you know, creating a personal expense account, an owner draw or anything, he was breaking out his personal expenses. So he would have haircut expense, dog grooming expense. It was, you know, breaking out everything. He wanted to make sure he was tracking what he was spending in his business so that he could replace it.
Dry cleaners.
Yes.
Personal budgeting. Yeah. Go back to Quicken for those kinds of things, right? I think they do that in your bank account. Like my bank account now separates, or in my American Express, it separates out by category, and I'm like, oh gosh, I kind of sometimes don't want that. Like, how much did I spend in restaurants this quarter?
That Uber Eats gets you every time.
Oh, yeah.
Right.
So Alicia, just to kind of wrap this up, we do have some questions I want to run through too, so I'm trying to leave some time for those. But why does chart of accounts organization matter so much? Why should it matter so much for a business?
Yeah, wow. I mean, that's like such an important like question. I don't know that there's just one like streamlined answer from me that you're gonna get. I mean, at the end of the day, like the workers, right? The people that are like trying to code, like you want to try to simplify for them so they're not having to guess like every single time that something may be a little different, like where to go. But that all rolls up to your financials. And as a business owner, right, I would want to be able to see at a snap of my fingers, right, click of a button, what's my, like, what is the financial like position of my company? I mean, am I making money? Am I not making money? Like, you know, where am I profitable at? Those are just some things that, you know, I really think, I mean, if I don't have my chart of accounts in a good manner, then my financials are just going to be kind of all over the place.
Like that. So let me go through some questions really quickly because we just have a couple minutes. And I know we all on this call too have a meeting right after this that you guys saw pop up just there. So Melanie asked, so Trish, if you want to take this, Melanie asked, what other features can track different locations for income? So where else inside of here would we be able to track different locations for income?
Yeah, great question. So I use the class feature. So, you know, when you think about your income, you know, at the end of the day, it's the same income. It doesn't matter the location. On your chart of accounts, we have our income, but we can actually track it by locations and still be able to run that profit and loss and see what the income is at each location by using that class feature.
So that's one idea. We did also, Melanie, I did a video or a webinar a couple weeks ago that was about, I think it was called How to Get More Out of Your Reports, but I'll try and ping it over to you. It talked about like, here are all the different fields inside of QuickBooks Desktop that you can run reports based off of. And so that can help you too, because little things that you just wouldn't even think about, like I always go to this one because it's so silly to me, but the ship via, you can actually run a P&L by ship via. Now, who would ever run a P&L by FedEx, UPS, USPS? I don't know, but we can use that field to get to some of these other things too. So we did a video on that, or a webinar on that a couple weeks ago. And then Ann asked, Alicia, how about you take this one? Ann asked, does the 8 to 10 expense accounts include sub-accounts?
I was just actually replying to her. So no, not like you would have 8 to 10 headers, and then underneath that you could have sub-accounts. So kind of like on that chart of accounts where we had the car lease or like office supplies, you could list out a couple of sub-accounts there if you need to. But obviously, as we're trying to explain, I mean, there's no need to go so far in depth where like you're, you know, tracking pens and pencils on the chart of accounts.
Hopefully that answered. So Ann was getting really stressed out how much we were limiting her. No. So 8 to 10 headers would be a good goal, right? And sometimes, guys, it takes baby steps for us to get through to people. We'll have to say, you know, we're going to get it down to 15, and then next year we're going to get it down to 12, right? And so people will start to get used to it. There wasn't one other question I just wanted to show you guys. They're asking about my view here, having the top icon bar. So you can come under view and you can go to top icon bar, and then you can add in your open windows list here. So that's how you flip that across. I know that used to drive me crazy too. So there's a couple more questions. We are out of time though. Hopefully you guys got a little bit of information from this kind of big high level topic. Definitely let us know if you have any other questions. You can follow up after the meeting today as well. Coming up, accounting terminology. We have a multi-part series, field service management course coming up, landed cost, property management, a restaurant panel. So definitely let us know if you guys have other things that you're wanting to learn. I appreciate all your time today, and we will see you guys next week. Thanks, guys.